Creamer Media's Mining Weekly is talking to Sir Mick Davis, a person who's extremely well known in these parts from his days with South Africa's power utility Eskom, and then also Gencore, Billiton, Xstrata, and now Vision Blue Resources. Mick, we want to know about the vision, and you can also tell us about the blue.
The vision's quite simple. The world is in energy transition and transitioning away from fossil fuels. Yes. And it's a phenomenon which is not dependent on any assumptions we're making about GDP growth or countries urbanizing or industrializing. It's a phenomenon which is driven by an international consensus that the world's carbon footprint has to be managed and reduced. And that governments have translated that into a series of regulations and legislation which drives the nature of energy usage in their own countries. So we see the massive inroads of renewable energy into the primary energy mix, and we see the helter-skelter drive into the electrification of motor vehicles. And all of this means that the commodities which support batteries and which support the consequences of renewable energy in the primary energy mix are going to be vital to achieving this decarbonization. And our vision is simply to be part of that process and to facilitate the development of mines which can deliver those commodities to enable the world to actually achieve its dream and its goal of a greener economic environment, at the same time supporting higher living standards. And so the blue is doing it in a benign sort of way.
Oh, fantastic. And you've got out of your starting blocks. You only formed your company in December, and now you've got this acquisition. You've raised $60 million. You've put half of it into a company called NextSource. What is NextSource going to do for you?
Well, NextSource has a very, very significant and hugely interesting graphite deposit in Madagascar. It's interesting because of its size. It's interesting because it's outside China, and it's interesting because of the high quality of the resource, which meets the requirements, the technical requirements of both small-scale and large-scale batteries. And as you know, graphite is essentially the anode of a battery. The battery is a cathode and anode, and the graphite goes to make the anode. We think that graphite is a strategically important mineral, and it's a mineral where users of batteries, people who require batteries in their machines and their motor vehicles, essentially want to ensure that there's an adequate supply of. We are pleased to be able to partner with Next in providing them with sufficient capital to start the first phase of production and to help them in their feasibility, looking at scaling up their project to significant size over time, and also to go downstream in the development of anode. And I think that's a very exciting venture for us as our first initial investment. I've had a lot of deal flow coming past my desk in the last few years, and I think this is one of the more exciting projects. We have two other projects that we've been working on, which we hope to close and complete during the course of this month, early next month. And therefore, the need to rapidly raise this first tranche of funding of 60 million, well, we actually needed to raise 50 million. And when we made our announcement yesterday, we had 61 million. We actually had 66 today because another 5 million came in after our announcement yesterday. But we needed that money to actually complete these transactions. And once that's done in the first half of the second quarter, I'll go back to the market to raise more funds. So I'm in a position where I can actually complete in further transactions because we have further opportunities that we're looking at.
There was the word rapid used, so you're talking about two more transactions. So it looks like you're going to move fast. You also set out an outline for the type of asset you want. It must be near production or at an advanced stage of exploration. Are there quite a few of those around that you see?
Yes, there are, and hence my need to raise funds quickly, which we did, and my conviction that there are more funds that we need to raise, which we'll do, as I said, a little later this year. There are projects. If you go back and look at the mining industry, it's gone through one of these very typical phases, having been late out of the starting blocks in the early part of the 2000s to address the supply needed to satisfy the demand, the secular change in demand caused by the industrialization and urbanization of China, where hundreds of millions of people moved from rural areas into urban areas. And the infrastructure requirements to satisfy that meant that there was a vast and massive increase in the requirement for commodities to support that, and the supply side was inelastic. The industry, after a few years, caught up, started investing in projects. It takes sort of 10 to 14 years from the time you think about a project to the time it actually can produce. And then, unfortunately, ironically, as the industry was ready to actually launch production, we had the global financial crisis, and so we ended up with a huge amount of supply with lower levels of demand. And so the industry has been under pressure as a result of that from its institutional investors to curb its energies in terms of developing the supply side, not investing money in the optionality of its asset base, not looking for new assets, but to devote their time and their focusing onto maximizing cash flow from the existing operations, making the existing operations resilient, and sending that cash back to shareholders. And that is good for returns and good for investment, but it's not good for preparing the ground for the next time we have a secular change in demand. And so what we have here is a change in demand which is not reliant on our assumptions of where GDP is going to be, and not reliant on finding the next great economy that's going to urbanize and industrialize like China did, almost 20 years ago. But it actually is a function of this international consensus. The world needs to actually manage its carbon footprint, and governments translating that consensus into regulation and legislation requiring a transition away from fossil fuels and the use of batteries in the propulsion of vehicles and in large-scale battery storage systems to support and stabilize energy grids which are served in the main by renewable energy. So that drives the demand, and therefore we need a supply response. And there is not a sufficient supply response, but we have within our universe of options a number of companies which have very high quality resource, which are large in size, which produce low cost product, which don't require significant collateral investment in logistics infrastructure to support them, and which have a benign mining and metallurgical process to it. So we, from a risk point of view, feel comfortable in actually pursuing those projects. And yes, there are a number for us to actually look at.
When we talk of battery metals, I mean, that's a wide scope. You've got in there on the graphite, and you've got this word flake graphite, which gives a bit of a nuance to it. But what are the other battery metals? What are you looking for? What is the scope?
Well, this is a very interesting question you ask, because most of the battery metals are metals which have an existing industrial usage. So copper, nickel, cobalt, certain rare earths. They all have an existing industrial use. Vanadium, for instance, for large-scale storage systems, vanadium redox batteries. Vanadium goes into as a strengthening of carbon steel. So all of these have significant industrial usages. So over and above that is this growing demand for commodities to address the need for batteries to be located in motor vehicles, batteries for mobile phones, systems for 5G, and of course this very large-scale storage systems for electricity grids which use increasing amount of renewable energy. And let me also say to you that renewable systems which will go to support the electrification of villages and towns in remote areas across, for instance, like the continent of Africa. And they will need large-scale battery systems to ensure that energy can be provided consistently when the source of renewable power is not working at that point in time because it's nighttime or the wind's not blowing, etc. So it's a wide range of commodities that we're talking about, commodities that we actually all know about, but commodities which will now have an additional source of demand, therefore driving the secular change and driving the pricing profile. And I think a very exciting area to be involved in, not only from the point of view of creating high returns for our investors, but for the fact that we can play a meaningful role in addressing the reduction in the carbon footprint, the reduction in emissions, and still providing solutions for improving the quality of lives of people around the world.
And that's important for our planet at the moment. And you're green, really. You're going into the greenness that we're looking for. And now if we look at something that I cannot ignore, that's the hydrogen economy. Is there any role that you play in there? I noticed with the flake graphite, they said more flake graphite goes into fuel cells than does into the other batteries. So is this broader? Can it also go into the hydrogen economy?
Yes, indeed, but I think we have to be cautious about the pace. The technology around hydrogen fuel cells is there. The commercial application of that, I think, is some years away in size. So I would think that, and this is just me speculating, that you're sort of 15 years away from where you're going to see the hydrogen fuel cells and your hydrogen economy playing an important role. So certainly the next 5 to 10 years, it's all about batteries. And so if I want to focus my investors on where they can actually gain immediate return and contribute immediate value in their investment in terms of this whole question of creating a more benign environment for our world to operate in, then it's in this battery space that we want to be in. But certainly in the longer term, new technologies will develop. The hydrogen economy, as you talk about, is going to be a thing of the future. And also, as you say, our first investment, our sort of lead investment in graphite, is going to play an important role in that as well.
Are the platinum group metals out of the question for you?
No, they're not out of the question. Not at all. They certainly have a role to play in going forward. But I think at the end of the day, you have to pick. You can't pick your commodity. You've got to pick your opportunity. And we have to find opportunities which match our investment and risk profile, and that's what's going to drive us more than anything else. And also to ensure that we can invest in the geographic areas where we can identify and mitigate any risks.
That was Creamer Media's Mining Weekly, speaking to Sir Mick Davis, who has launched an investment company called Vision Blue Resources.